Hey Matthew,
Hey, how's it going, Werner?
as I said, haven't watched news this morning, so
Oh, that's probably a
yeah,
good thing.
it's a productive morning without getting distracted, without getting emotional and angry
I
about
don't have to
stuff,
pick up my
and
scream jar and pop the top and scream into it and close it.
yeah, something like that,
Yeah, yeah.
So, but I'm sure a lot has happened,
Mm.
So, but yeah, no, having a good day, and there's also you can feel the seasons are turning. Although I think next week we're going to get walloped with the last polar vortex.
I better
Apparently,
not.
the polar vortex is collapsing.
I got a
Uh,
maple
you
tree
know,
right outside that just started budding. I want to see those buds grow in the next couple of weeks. Okay, don't ruin this for me.
exactly. So, that puts a smile on my dial as well. Feeling there's a bit more warmth slowly coming through. But yeah, otherwise things are good.
Right on, man. So, a lot of people have been talking to me about venture capital, private equity,
Hmm.
and Matt, you mentioned these words a lot. What do they mean? What is this? So I thought you're a finance guy. What do you think venture capital is? What do you think private equity is? Educate me, Werner.
Okay. Um, well, I mean, before we get into the technicalities, just a few things what it isn't.
Oh, this is good.
I get, I talk about this every single day. Founders, startups, entrepreneurs asking questions about or looking for venture capital, not venture capital, looking for investors. Kind of that's where the conversation starts. They're looking for investors. It's not about venture capital or private equity, it's investors. And kind of the first thing that I always tell them is that, you know, it's not as simple as that. Secondly, the kind of people that you're looking for is not the people that have invested in their LinkedIn profile.
Oh,
Uh, that's not the kind of person that you're looking for, and that the real investors is actually quite under the radar, and they're very serious people, uh, and they don't walk around and publish the fact that they investors.
it's so funny you
The sec,
say that. Like I just want to like it's
yes,
crazy to
sure.
me. Like I remember one of my mentors mentioned to me because I kept chasing exactly what you said, like chasing after investors
Mm.
that like I would just look them up on LinkedIn.
Mm-hmm. Mm-hmm.
And I spend a lot of my time having conversations with people that are like a world class expert in wasting my time and asking me a whole bunch of weird, intrusive questions that I'm left scratching my head saying, I'm not sure what this whole thing is about.
Yeah.
And then I talked to my mentor about it, and he's like, so there's a whole bunch of like fake venture capital out there, a whole bunch.
Oh, yes, they are.
Yeah.
Yes,
So is that what you're
absolutely.
talking about? Like the fake venture
Um,
capitalist or?
yes, but not just that. A lot of folks also learned that Investor works well in terms of content development. It's a hook. It generates attention. So 85, 90% of the so-called investors that I've seen on LinkedIn, if you just scroll a little bit down and you just take 10 seconds and look at their profile, you'll very quickly, and look at their education background and what they've done, you'll very quickly see that, yeah, you first a content developer, or you somewhat of an advisor or a
Yeah.
consultant, but you believe that being an investor or being seen as an investor is cool. And what it shows me, so for me, first and foremost, it reiterates the fact that most people don't understand what investors are. Never mind the fact what's private equity and venture capital. Investors uh, aren't, most of them aren't cool people. They're actually pretty serious people. They're also incredibly smart people, a lot of them. And by smart, I don't mean smart like being taught. I mean being experienced, street smart. Um, it's not the kind of person that'll put it on his profile and think that's going to work. So the first thing that you always need to do, Matthew, whoever is looking for investors, is don't fall into that trap.
Guilty.
By finding investors just on LinkedIn, it's going to be like you said, it's going to be a complete waste of time, and it might just uh, it will definitely not add value to your process. It actually might confuse it, uh, extend it. The negatives out of it will be more than the positives.
Mm. Yeah, like a lot of when I think back to like a lot of these VCs I had conversations with, it's they're trying to sell me into an incubator. That's like a big thing that I saw.
Hmm.
Um, Usually they're connected with the incubator and they're like government financed and stuff like that to get me in there in the first place. And they're basically a headhunter. An investor is their
Yes,
little nickname that they give themselves.
yes.
The other thing I've seen is this one's really funny. You ask them like, how many companies have you invested in? Oh, I haven't invested in
Hmm.
any. So
Yep.
I'm going to be your first startup that you've invested in. Yeah, yeah. How
Big
long have you
flag.
been doing this? Oh, I've been doing it for like 8 years.
Exactly. Big flag.
um,
Big, big
and
flag.
the other one that I saw was groups that just want me to work with one company, and it just so happens to be a company that they're connected at the hip with.
Yes, there's a few flags. So let's just take a step back and let's just unpack investment a little bit. So venture capital, and it's going to sound confusing, but I'll make it as simple as possible. Venture capital is actually a form of private equity. So let's
Oh,
start with private equity as the umbrella. A private equity is simple investment in non-listed private companies, not publicly traded companies. That's the first thing. The second thing, private equity then splits into two main blocks, if you want to call it that way, or two streams. On the one, you have venture capital, and on the other side, you have private equity. As I said, it might be confusing. Um, but they're two very different animals and they're two very different investment models. So the simplest way to understand that is to look at them how your business goes through different stages. So venture capital is all about supporting startups, uh, great ideas, disruptive ideas, et cetera, et cetera, et cetera. Whereas private equity is more about capital efficiency, getting growth out of companies. It's all about established businesses. So that's the first thing where you need to start when you say, I'm looking for investors, is that's great, but where are you in terms of your business? Uh, and that's the first question you need to ask yourself before you start developing a investment kind of strategy, funding strategy in terms of where to find these people. The second thing that you got to realize is that when it comes to venture capital, there's a vast, so private equity, you're never going to see government play into private equity.
no, no.
Uh, but in venture capital, you do see government play with in terms of
Oh,
support
of
of
course.
funding.
The risk is crazy. So
Correct.
you need the government to go
Correct.
in there and bail out the VCs from all the.
Correct. But what you will find is that government venture capital funds or government venture capital will look for you.
Mhm.
They will chase you. The real venture capital folks, you will probably have to go to them
That's correct.
uh, because there's so many folks that is pitching them. It's not a deep analytical process like private equity is, where you look at opportunities. It just operates differently.
Yep.
So, where private equity will knock on your door, venture capital isn't going to knock on your door. So, that's the first thing that you need to understand, unless it's government.
Yeah, when I was pitching in Toronto, it was like clockwork. It's King Street. You're on King Street. You got all the financial firms there. You're
Hmm.
walking down, and it's just one after another. You go into. You get a line of guys
Correct.
in front of you. I say guys. There's like female founders as well. But we all have a laptop, or some of us just do the pitch off of our cell phone, and
Hmm.
we're just one after another going in there. We get like 5 minutes to broker the
Correct.
initial phase of a deal, and then you just hear next, and then the next guy gets called in just one after another. And this is every single day. VC firms deal with this, and all the VC firms are just lined up in a line. So it's just
Correct.
you leave one, go to the next, go to the next, go to the next, go to the next. So yeah, I totally
Correct.
get what you were talking about with VC, but private equity is like a bit of a beast to me. Like I don't really know that much. I only have like my interactions with VCs, and by
Hmm.
having some venture capital investment in my last startup, so like at least I understand a little bit more about that one. But private equity is, like you said, kind of a beast. I don't know that much about it.
Okay, so let's talk about private equity then a little bit. So private equity, so the fund itself is structured similar than a VC fund. It consists of limited partners, managing partners. The way it operates are pretty similar, but the kind of opportunities and investment opportunities and deals it looks for is is very different than venture capital. Um, it looks specifically at established businesses that has an established track record that they can see has a substantial potential for additional growth. Um, so, as an example, venture capital would want to see rapid growth over 2, 3 years.
Yeah.
They might want to see a 10 to 100 times return on their investment. Private equity is in it for a much longer term, and they want to see a 3 to 5 times return over 7 or 10 years. So it's a very different model. In terms of you know getting engaged with private equity. Now, normally what happens, venture capital is very industry specific. And the first thing that I try and tell folks that talks to me about venture capital is that I kind of try and break it to them nicely, kindly, that unless you're in a specific industry, your chances of getting venture capital is remote. And those industries are not selected because they love those industries. Those industries are selected simply because of the scalability that they allow for and how those industries operate.
And the
Private e-
connections as well. There's a connections play
y-
that goes into there.
Correct, 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 correct. Private equity, it has a much broader base in which it invests. However, here's a few things to keep in mind for anybody that's looking at private equity investment, and kind of the first thing that you need to think about before you even take the next step to find out more. So let's say you have an existing business. It does well. Private equity knocks on your door and they say, well, we're interested in doing a deal with you.
Yippee.
Uh-huh. If you think the term sheet for venture capital is tough, wait till you see the term sheet for
Oh, they
private
got term
equity.
sheets too. Ooh,
Oh,
scary.
Matthew, they also a lot longer
Hmm.
than your venture capital term sheets. The first thing that you need to realize with private equity, they want a majority shareholding in your business.
Correct.
Otherwise, they're not interested. Venture capital couldn't care less. They want some shareholding, but they're not interested in a majority shareholding. So if private equity comes knocking, or you want to approach private equity, you need to be willing and comfortable giving up the controlling shares of your company. I'm not going to go into the different share structures, that kind of stuff. But they're going to be on your board or they're going to be part of your management team. If they don't replace you, they're going to look over your shoulder and they're going to start interfering in your
Oh
business.
no. What kind of
Uh,
interference do you see is like the typical interference?
well, here's the kind of thing that they do, and is that they will start, first and foremost, they will start. So growth is based on projections and what they think is possible and what should be done. Also, remember that private equity deals are most of the time are funded by debt. Venture capital is equity.
Yeah.
Private equity is funded by debt, and they've made some very detailed and very smart projections that the debt will be paid off by increased cash revenues, cash flow, uh, growing the business like they think is possible. So, as an example, the first thing they would do is they would look at your revenue projections or your revenue budget and say, yeah, no, that ain't going to work. We want to see a lot more aggressive growth, or we want to see you do at least $500,000 more this year, or 1 million, or 300,000, or whatever it is. So they're going to immediately lean on you to generate more revenues. They're not going to help you do that. That's not their job. It's your job.
So I've seen this. Okay, I've heard all of this before, and I've seen a
I'm
few
sure you
tail
have.
doves of that. Or like, it's what I typically see from that is a couple things. One is immediately they expect the management team to start, let's be real, hacking away the fat. So like laying off employees,
Yes, they do.
like
That's the
cutting
second
parts of
thing,
the business.
reducing
And,
costs.
yeah. So cost
Absolutely.
reduction is like a major component of this.
Yes, it is.
The second thing I've seen is a lot of times, maybe you've seen this too. I've seen private equity have like consulting fees where they come in and they consult the business
Oh,
on how to do
yes,
that as well? So
they
the
do.
double extraction, the double whammy.
Yes, they do. So, to answer your questions, and they're very good. As an example, one of my
I
friends
mean, private
and
equity is
client.
great. We love private equity. Private equity is awesome.
Oh, I can introduce you to a few people who doesn't, so you need to know what you're walking into.
Hmm.
So again, as an example, when they do come knocking on your door, they're gonna ask for a majority shareholding. They are gonna ask for more revenues. They are gonna ask you to reduce costs. They don't care how much you love your team, how much
Yeah.
you love doing certain things. They've got no holy cows. They just want to see growth, return on capital, and performance. That's honestly all they're interested in. But a lot of people, what happens with a lot of business owners when private equity comes knocking is that they're not prepared for it. So so the first thing that they feel is they actually it feels like a compliment that private equity is interested in their business. That's number one. Number two, they can smell they can make money, or they think they can walk out of here with a really big fat check after a few years if a few things happen. So they get excited. It's a way to, for some of them, it's a way to see continuity in their business, but also stepping away from their business.
Hmm.
However, Matthew, I've seen this in real life with some of my friends and some of my clients, is that the first thing that private equity do is also they do a very, very detailed due diligence process. You pay them for that. Secondly, it's called consulting fees. Secondly, as a business owner, depending on how prepared you are for this, can easily take you 3 to 4 months.
Oh wow.
I've seen, oh yes, depending on how prepared you are. If you're prepared, it will take you a month and a half, 2 months. If you're not prepared, it'll take you 3 to 4 months because there's so much stuff that needs to be prepared for them to really make a decision and the deal to go through. I've seen businesses actually nearly go out of business because the owner lost focus during the 3 to 4 months period and believing that this deal is going to happen. And then in the last week, it didn't.
Mm.
So again, when it comes to private equity, be very, very careful in terms of understanding exactly how they work, what are they going to charge for, what is on the table, get the uncomfortable stuff out in the front early on, make sure that you can work with them, make sure that there's an alignment in terms of mindset, some values at least, that they love your business as much as you do, they don't just see the potential in it, etc., etc., etc. Otherwise, it's going to be an incredibly stressful experience.
Yeah, like when I was the CEO of Food Bite, like I was approached by a few private equity firms of the United States, and the very first thing that they put on the table, and it goes with something that you just said, which is regards to like the handoff, like
Mm-hmm.
the way that it was phrased to me was, we're gonna carry on your founder's vision. We're going to be able to execute
Yes,
on the values and the culture that you set for your team.
yes. Well,
That was like laid out to me multiple times by like a single private equity firm from New Jersey. They were like very clear, like, you tell us
mm-hmm.
what you're trying to achieve, and we're going to do our best to maintain that. Does that actually happen though, or is that like just kind of first month, like, just kind of like, hey, like everything's going to be okay? Oh, like the founder's gone, party time, like.
So, so before I go there, just a question: what kind of shareholding were they interested in?
They were interested in, as you mentioned, like taking the majority share. So
Yeah,
golden handcuff kind of stuff.
it is a golden handcuff. Yes. So, Matthew, just to be bluntly honest in answering your question, if your business is performing well and it continues to performing well and your team performs well and they meet their objectives, they're going to stick to your values and your principles and what you want to
Okay.
achieve and things like that. The minute they feel there's some dissonance or some stuff starts slipping a little bit, some of them can get quite heavy-handed in how they get involved. Um, They won't get heavy-handed immediately, but you will feel a very deliberate nudge first,
Mm,
then a bit of a push, and then if a basically just get out of the way, we will do it the way we know will work. Because they have the majority shareholding, they can do that. So, you know, you 100% right. You should take the commitment to values and vision with a pinch of salt. It's the intent, but it's not a guarantee.
okay. And what I'm confused with now is going back to what you said earlier, that private equity forms like an umbrella
Yes,
of private equity and venture capital. Why
correct.
why is like so you have like a private equity firm that owns other private equity firms, and you also have a
Yes, you
private
have
equity
that as well.
firm that
Yes, you
owns
do.
like a venture capital firm. I've seen
Yes, you
this.
do.
There's a very well known Canadian private equity firm from Ontario that is very well developed and vastly worldwide known in the software industry. Uh,
Hmm.
uh,
Who will not be named.
will not be named. And yes, like I found out that they have venture capital firms. So one would approach me and have a conversation, and they all share the same CRM. So that venture capital team then had to wait. The other venture capital teams would have to wait 3 months after I said no to a deal, so that exclusivity is now released, and then the other
Got
venture
it.
capital firms can come after me. So, and they're all
Got it.
fighting amongst each other to see who's going to get me to deal. But actually, at the end of the day, they all work for the same firm, anyways. When that mask came off and I saw that of like what it really is, I was like, that's kind of. I don't know how I feel about that. It's kind of slick, like what you're doing over there. It's kind of shady though, but I get that.
Um, yeah. I think, Matthew, different people react differently. Founders and entrepreneurs react, each of them react differently to the whole, let's call it investment process. It doesn't matter if it's venture capital or private equity or growth equity or angels or micro VCs or whatever. They all react differently to the process. Some of them are very, very good at it, and uh, especially somebody like you that's gone through two or three startups, you know the gig, you know the rodeo,
Well, like
you
don't get
know,
like they got their own game. There's no reason to get like mad at them
yeah,
or
but
something.
you've learned how to play that game. Be honest.
Yeah, like so like at the end of the day, if you I guess it depends on like what you're trying to achieve with your startup. Like FoodBite was venture capital backed. It's trying to build into a rocket ship. I'm trying to blast it off to the moon and have it not explode in orbit like
Hmm.
a certain American reusable rocket company. But that's a concept of like what it's trying to do, and that blast off is only going to happen with venture capital money, and ultimately me
Yes,
putting in my resignation seat once
correct.
when
Yep,
we get that blast off, because that's when I exit, and then the new management team is going to be coming in, right?
exactly.
So with regards to that, that makes sense for what my last startup, FoodBite, is trying to achieve. Where my first startup was just corporate buyout. It was like it's
Mm.
deep tech. I'm not looking to become like some super venture capital back
Yep,
startup. I just need somebody to do acquisition. And then the third one that I'm on Black Anvil, the point of this one is bootstrap.
yep.
Like, can it actually bootstrap? Like, and I think that you can now. Like, I don't think that startups need
Yep.
VC money like we did in the past, to be honest. Now, maybe that's just my ego getting the best of me, but I feel like with all the AI tools out there now, all the resources we have, that technical people can become business people, and we can make some pretty darn good businesses.
Yes. So that's the short answer to that. So
Oh, thank
if
you.
any founder,
Okay, I guess
Matthew,
we're
were
done
to
then.
ask, yes, if any, yep, exactly. If any founder were to ask me if I would build a software, tech, biotech, whatever business, if I can build it without venture capital. And it depends on the model. Some of them are quite capital intensive. Some of your biotech stuff is capital intensive. So that's a different conversation altogether.
Of course.
But if it's not capital intensive, the first thing I would tell them is if you don't need venture capital, don't ask for venture capital. Um, it comes with a certain way of doing business, even though they don't have a majority share. But there is a certain way of building your business. There are certain expectations in how you build your business. Um, and, at a certain point in time, uh, even the best founders get irritated and frustrated by even venture
The
capital.
intrusive questions and
Correct,
I think about like
correct.
the wasteful meetings, intrusive questions, just a lot of people saying, "This is great, this is awesome." I totally like it. Just not now's not a good time. Can you come back in a year? And it's like, bro, like, yeah.
Well, not only that, Matthew, I think they also interfere in product development. I think they interfere with
There's
how you
that as well.
market things. Yeah, they interfere with how they
Yeah.
ask you, is this possible? Why aren't you doing this? That kind of thing. And it does distract, from what the founder, many times it distracts from what the founder wants to do. However, I do want to come back to bootstrapping.
Okay.
Now, bootstrapping before AI was kind of associated with scrappy. It was kind of messy, scrappy, a huge amount of loose ends, uh, you know, a bit of like a house of cards, that you kind of beginning to build before you kind of start building the foundations.
Oh yeah.
It was shaky. I think AI has changed that completely, in a number of industries, not all of them. So when you say bootstrapping now, like you've just mentioned, that's not bootstrapping the way it was a year
Oh
ago.
no, like bootstrapping like 8 years ago, 10 years ago for startups was like I would go to a bootstrap startup and be like, "Hey guys, how's it going?" And it would be like opening a cave and going in and seeing cave people run around and like smash berries into like a gourd and like paint on the wall, and
Yes,
then
it would be that
in
route.
behind them and look at me and be like, "What do you think of my marketing plan?"
Exactly. And that's not simply the case. I mean, I've seen you work. So when you say bootstrap, I know what you mean. And it's not what it was before. So if I were to advise any software company or tech company that isn't capital intensive, my first message to them today would be either bootstrap it yourself or get a mate that can help you bootstrap it, but don't
Get
go
me
and look.
mates,
Excuse me?
get them all together.
Correct. But don't look for venture capital unless you get to a level of your business, where you have some traction, uh, where it actually makes sense to get them involved, instead of just uh, getting in at the wrong kind of valuation or whatever.
And so venture capital, because it's predicated on these massive growths of businesses, this wouldn't be for like SMEs. This wouldn't be for like somebody that's got like a car wash or somebody that owns like a small restaurant or something like that. Or do you see venture capital going into that? Because I've heard of venture capital going
No.
into some stuff, and I kind of, and I have to take a moment to reevaluate the situation. There was like a restaurant chain of the United States that had like venture capital just because I figured out like a really good way to franchise. So is that like a
Well,
common thing, or is that just exclusively to like tech where you see these big booms and busts?
it's not a common thing, but there's a few factors to keep in mind. So, as an example, ever heard of the brand Liquid Death?
Yeah,
Of
unfortunately.
course, of course.
Most expensive
Unfortunately,
water in a can. Yeah.
that's what it is. However, they approached it from a very edgy,
It's one way to put it. Yeah.
creative. Oh, yes. They hit it out of
From
the
all the
park.
ads playing rock metal. Liquid death.
Oh man, I love their content. It is the most creative. And by the way, Matthew, I actually thought they're going to run out of steam, and they haven't.
No, no, they just keep going.
Yes. Now, first and foremost, venture capital looks at something that can generate value quickly on equity over a short period of time. Generally, that used to be certain industries. But if they see a brand that is going viral or is doing a few things very smart or have incredible scalability and beautiful margins, water in a can you imagine?
Mm-hmm.
Um, Venture capital is going to get in, so Uh, it's not just industry specific, but 85% of the deals are kind of within four, five, six industries. But again, like the whole investor model, there's always some outliers, a few ifs and buts, a few things that happens that doesn't kind of follow the normal process, but it can happen. Um, I haven't seen them got involved in kind of a restaurant chain unless there's a specific component to that that's going to, I hate this word, that's going to disrupt the industry, but
Okay.
genuinely disrupt the industry. Then again, if it's scalable, can grow fast, if they can dominate a specific marketplace, absolutely. But they will come knocking, because they would probably be aware of, or they would have seen you and think this is interesting. In those cases, very rarely would you have to carry a pitch deck around and try and get them on board.
Hmm. The best strategy I've seen for garnering venture capital was a startup that I know from Montreal,
Hmm.
and it wasn't even a tech startup. The guy figured out like his secret code that he cracked was how to do like really short term, fast, effective
Hmm.
fashion branding. So he would sell
Hmm.
fashion branding concepts to drop shippers. Are you familiar with like the drop ship model?
Of course.
Yeah, so he would figure out like what's the new trendy thing, and he would go and
Hmm.
design it and say like, hey, this is like what you need to drop ship. And then because he was informing people and they were building based off of his content and he could execute
Hmm.
this in 1 to 2 year cycles, he
Hmm.
was capitalizing with revenue like entirely bootstrapped for like the first couple times he did
Yes.
this. And
Yes.
then he was just really bad with expending money, so he had to bring on like a CFO. But once we got this CFO on board, it could actually become like how should I say, responsible with spending money.
That's the right word. Yes. Responsible and discipline.
Yeah, the way
Yes.
he expressed it is he would take investor money and put it in a wheelbarrow, wheel over to the fire, and throw it in, and be like,
Yeah.
that's nice and warm. More, please. More.
Good. Correct. Matthew, something that you and I always joke about, and we tease each other about it, is that, founders needs to have a certain level of madness that kind of comes with the territory,
Oh yeah.
craziness, you know. For venture capital likes that kind of stuff.
Oh yes, they do.
Uh, and if they can make money out of it, they love that kind of stuff. So what we've just discussed, what you've just described, is that level of non-conformity. There's a certain level of madness to it. There's a certain level of creativity to it that most entrepreneurs don't have, and that most people don't have. Uh, and venture capital is always on the hunt for that kind of founder. So it's not just about the business, it's also about who
I
is founding
love what
the
you
business.
said because
Yes.
it's not really about the product, the brand, the
Nope.
business. They're looking for
Nope.
people. They're looking for
Yes, they are.
founders because
Yes.
the secret trick that this guy unlocked was he would do like the typical like, hey, if you're an investor and you're interested in like what I'm creating over here, sign up for my newsletter, and that would be on his website.
Hmm.
But the trick
Hmm.
behind it wasn't a newsletter for the brand. It wasn't a newsletter for what he's trying to create or the
Hmm.
product or the business or anything. He just talks about himself. And like that was I know, like he just talks about
Yeah.
like what he's thinking about that week and what he's thinking about exploring. And he would
Yes.
just talk about like things that he thinks is funny, things that piss him off, things that he would just enjoy.
Hmm.
And because he personalized it so much and at the same time his ventures created massive growth, well then the
Hmm.
VCs were like, this is my guy. And like I'm gonna
Yes.
basically squeeze him like a sponge and squeeze the last bit of
Of
capital
course.
that I can get out of this guy. And I'm
Of
just
course.
around for the show. So
Yes. 100%. So if you were just to look at that level, your private equity acquisitions or targets are a hell of a lot more boring, uh, but they're also very profitable, or they
mm,
can be very profitable, the non-sexy, boring kind of business model. Um, Whereas venture capital, they're looking for that non-conformative uh, founder that is a little bit crazy, that can blow things up, either in terms of generating astronomical growth over a very short period of time and stay on top of that growth, or somebody that's going to friggin' flame out so quickly and tell them, folks, I'm flaming out, this isn't working, but has the self-awareness and the honesty to tell them to tell me, yeah, no, look, this is not working. I had a lovely conversation with so I've signed up to an email that very creative, a newsletter. There's an AI for that, like kind of see what comes up. It comes in daily into my mailbox, and I spend 5 minutes on it because it's interesting. And I picked up a startup in Utah. Um, I'm not going to give you the name, but kind of clicked on the call to action and said, yeah, I would like to find out more. Give me a demo.
Mm-hmm.
And I thought I'm going to have the normal, nice kind of prospecting conversation kind of nonsense. And I actually linked up with one of the three founders, co-founders. He was doing those kind of calls. And what we ended up talking about was far less demo, but about his experience in terms of building this platform.
Oh, I love it.
Him and his two co-founders, and first and foremost, if I were a VC, seeing a co-founder make those calls, get full marks, 100%. It shows me that they are committed, they're serious. He was very frank with me. He said, Werner, we've already gone through 3 or 4 pivots, but we're 6 months away from profitability. And it's that kind of commitment, but also a bit of craziness and non-conformity that venture capital is hungry for. Now, what has happened with venture capital, and venture capital seen its peak, what, 10 years ago, 12 years ago? I
Yeah,
think it
yeah. I
was.
had a presentation. I remember it was around 2014 was the peak of it in Canada and the
Correct.
United States. And it's just been going down year over year since, to the point where, well, like Silicon Valley Bank crashed because
Yes,
the
sure.
VCs are not producing
Yes,
the returns that they're supposed to be producing. I think we have too many
correct.
VCs in the VC market. So,
Yes, you do. Also, you have far too few deals coming out of it. You know
oh, the
that as
deal
well
rate
as
is
I do.
dog water. Yeah.
But, but Matthew, honestly, if I see 100 pitches a year, I don't, but let's say I see 100 pitches a year, there's probably one or two that I'll remember. That's it. It's 1 or 2% that
Yep.
really
Agree.
stands out. And it's got to do with the idea, but it's got a hell of a lot to do with who's pitching it and what you sense in terms of how he pitches it. I would rather have somebody pitch me a venture capital idea where he doesn't use the word disruptive, but you just look at him and think he's going to be as disruptive as shit. This is just going to be a ride like nothing else. I would rather ask that kind of person to come back for a second conversation that somebody that pitches me how disruptive they're going to be, etc., etc., etc.
Yep.
So you do need that edge to be effective, to be successful at attracting venture capital.
Yeah.
In private equity, they hate that.
Oh no, those are the unpredictable, unreliable people. Like the
Yes.
stuff that I look for in founders. Now the people listening to this may be using this information against me. But the stuff that I look for in
I'll back
founders
you up.
is I'm looking for people that are genuinely curious about something. Like they want to
Mm.
experiment, they want to try out an idea that they
Yes.
have, and second is they're related to this thing. They have some fundamental relationship with the problem. They're not just like, hey, I'm a computer
Yes.
scientist
Correct.
or engineer and I'm attacking um,
Correct.
like public hunger because I watched a documentary once. It's like, no, like I want to see like how this has like affected you personally so that you have like some understanding of what this truly means for people. And the
Yes.
third thing is I want to see him pissed off. I want to see him give a presentation and I want to
Yes.
see him not like spitting mad, but I want to see him genuinely like angry because to me, like I
Yes.
am so sick of watching Silicon Valley pitches and Toronto pitches of slick back hair people explaining to me how they're all going to be billionaires in the next 5 to 10 years. And I'm like, cool. Like
Yeah.
this is cookie cutter. It's been done so many times. I've seen endless
Exactly.
amounts of TAM assessments saying that it's $1 trillion market and we're all going to be rich, rich, rich. If I just give
Sure.
you money right now for an idea you're not making any money off of. Got it. Yeah, sure.
Sure. Sure. Look, Matthew, I've seen that across the board, not just with venture capital. I've seen it with founders, not just in software. And one of the things that, and depending if they talk to me personally or if they talk to me in my advisory capacity, you know, uh, you can't always tell them not to do something.
No,
You can,
they're
and
gonna do it
sometimes
anyways.
I'm so glad I don't have to. But honestly, the biggest issue that I see with folks that wants to or plans to pitch to venture capital is that they honestly, just what you said right now, they're not connected to the problem, but not just that, um, they completely overestimate the scalability of their business or, in terms of what it can do. And I don't mind something that's incredibly scalable and can be a unicorn and venture grade, etc. But I think people need to realize how scarce those startups are. And most of them happen by luck, not by design.
Yeah, through
People need to
experimentation.
understand that as
Like,
well.
I
Yes.
don't think I've ever seen a startup ever be able to sit there and say, hey, like I got everything figured out. Just give me some money and I'll make us all billionaires. Usually it's the startup is like, I think people like this. And then they try it out. No, they don't really like that. Well, maybe they like this. And then they try it out.
Exactly.
Well, I got some feedback, got some revenue. Is that really? So like they experiment around. Like an example is like Slack. Slack is a beautiful example.
Oh,
Canadian startup. Couldn't figure
mhm.
out why people pay for it. Couldn't figure out what the pricing is. Couldn't figure out why they cannot seem to get like teams of
Mhm.
people on board. Retention rate was just terrible. They were
Yes, it is.
fiddling. They were just piddling around until one day somebody was like, "Hey, like maybe we should just do like an add-ons package, and like people can just like integrate what they're working with together with Slack, because then like people can use Slack, but then really
Yes,
they're just using other things, but they're just using Slack as like an on-top layer." And it was like,
good.
boom, it exploded. So,
Yes,
so like that's what I mean. Is like sometimes people dick around with problems till they figure out what the real problem is. And like FoodBite was guilty of this. FoodBite went in and was like, oh, everybody wants a food safety program. Everybody's going to get food safety because it's mandated. Like
correct.
that
And
just,
we're going to make money out of it,
yeah, yeah.
etc., etc.,
And then it's like, well,
etc.
people do want food safety programs, but only when their retailer tells them that they need. Like they couldn't, like, most of the time when the government tells them they need a food safety program, well, again, a lot of times the government doesn't know about a lot of the companies that need
Mhm.
food safety programs because they haven't self-reported themselves to the government,
For reasons.
for
Yep.
reasons. But FoodBite thought it was going to solve food safety, and it's like, no, we basically, and maybe FoodBite has changed since I've last been there, but the point behind it was like, we're just here to document the journey and
Hmm.
document the pain points and where the problems are when they arise. And
Hmm.
we're like, we'll take care of the documentation and that storyboarding of the
Hmm.
journey. And then with regards to creating data off of that to get it ready for an audit, we can take care of that too. But we
Hmm.
understood, like, after doing this for a couple of years, where the entry point was and where the exit point is for FoodBite with regards to where we
Sure.
fit on the totem pole of
Yeah, yeah, yeah. Yeah,
crap
yeah.
or shit that the company has to do, right? And
Yeah,
then once when we realize what we actually are and what we actually do, okay, like now we can actually have a healthy approach to this. But that took time.
exactly. It does. Um, and for me, and I mean, we're talking a little bit about the startup journey now, but your good venture capitalists or capital funds understand that, and part of what they bring to the game is, or what they're supposed to bring to the game, is a network of connections, experts. Let's not talk about the experts, but that's kind of there to help you accelerate those kind of pivots or learnings, which doesn't always happen. So again, Matthew, even when it comes to venture capital, is that if you're a founder, and it's incredibly difficult to get any venture capital fund to be interested in your startup. It has
Mm-hmm.
always been, it's now even more difficult. Don't just take the first one either. You got to be kind of careful in terms of who you get engaged with.
You talk to 100 VCs, you get 10
Yes.
offers, and you take one offer of the 10. That's like an old lesson.
Yes, it is. And because they're not all the same. They might have the same model, they might operate the same way, but culturally they're not the same. The team that they have that supports you are not the same. That's why when you talk about government venture capital, something that Canada really invests in, pardon the pun, is that it's there to do a specific task. But founders like you have learned how to work with that and not to get stuck with that.
I don't know about that. Well,
Well, it depends where the business is going, when you kind of need it, it's there,
mm,
but it's it also, so back to the kind of thing that I just discussed a little bit earlier about the madness, the creativity. It's it, not everybody would agree with this word, but you also want to see in a founder, you want to sense a very high level of competitiveness and a certain level of, it's not, aggression isn't the right word, but you want to see competitiveness and you want to see a high level of commitment to get this done. Doesn't I don't care what it's going to take me. I'm going to knock on this guy's door and he's going to be my first customer. I don't care what it's going to take me. I'm going to knock on 50 doors. Even if 49 tells me I'm nuts, I'm still going to go to the 50th door and say, this is really the best thing ever. That's the kind of thing that they want to sense. Venture capital. Private equity, what they want to see is they want to see maturity, they want to see discipline, they want to see an established team, they want to see established processes. The last thing you want to talk to a private equity about is um, customer discovery, product market fit. I mean, you're going to lose them in half a second.
mm-hmm,
So my advice for any entrepreneur or founder that is looking for investment or believe that they need investment is to just kind of what we've discussed today, Matthew, is to really understand a little bit more in terms of who does what, who supports what, who's designed to do what. It's not all the same. Somebody that's going to support a medical device is going to look at it very differently than somebody that supports
oh,
a software
fundamentally, yeah.
as, yes. Also, you need to be willing to face the truth and that your idea might not be investable. Uh, you know, I know. And Matthew, you make, I mean, I laugh because just of your reaction, but people and their ideas is sticky, man.
Mm-hmm,
They, they, I've seen conversations where I really challenged them hard, trying to give them a message. The only thing that I haven't done is taken out a billboard as they drive home to tell them this is a really bad idea. They don't get it,
mm-hmm.
So at the end of the day, that's also just part of the startup industry. You can't change it.
Yeah. So there's two things. The competitiveness rings a bell because I brought up to my mentor when I was doing my pre-seed round. A lot of the VCs would ask me, like, "Hey, like, what do you do in your spare time?" And I'm like, "Oh, I do like these different things. Like, I go hiking.
Hmm.
Uh, sometimes I play board games. I hang out with
Hmm.
friends. Sometimes I do art. Sometimes I just program in my spare time. Sometimes me and my friends just do stupid shit together and just see like how funny we can make it.
Hmm.
So like there's different things that I do, and then a common thing that the VCs would ask me like, "Do you play any sports?" Like,
Exactly.
and I always thought
Exactly.
that was weird, so I brought it up to my mentor and I was like, "Hey, like, what's the deal with that?" And he's like, "Well, we're trying to figure out like your ability to do physical competitiveness.
Correct.
So we're trying to assess that." And I was like, "Why is that an assessment metric?" Because if you have high physical competitiveness, that means that you're good working on a team with other people collaboratively to be able to achieve a specific objective, which is different than intellectual competitiveness, which is you're analyzing the
Oh,
situation you're in
100%. Yep.
and you're trying to understand how do I improve my metrics and how to get out of this situation. Because if you don't, you're going to end up trapping yourself in your current situation.
I agree with that 100%. And it's something that one of my good friends that's involved with a very well-known incubator or they're actually accelerator, but they don't like being called that way, in town, and he's a performance coach, and that's where that belief comes from. However, Matthew, there's something also to keep in mind with that, is that what they don't want is they don't want overt aggressiveness.
Oh no, that's not.
That
No.
that just pisses people off and that can't work together.
Like
They want to see
chauvinism, like all of that
exactly.
stuff is like no. Like if you go in there, I like listen, MAGA supporters, you guys are great and all, but like that doesn't. This kind of chauvinistic, coercive mentality of how to get deals with people. At
Mhm.
least I'm not seeing how that functions in my world of the startup world, because
Yep,
our world is supposed to be about being approachable, being
correct,
somebody that you can logically work out problems with, being able to
correct.
figure out how you can create value for them and they can create value for you.
Now,
Threatening people, being chauvinistic, being egotistical, those are things that usually get doors slapped closed in your face. So,
yes, and we see something happening in real life with that. Hey, I mean,
yeah,
let's not talk about that. But it brings me back to the previous point that you've made, or that you've made earlier, that, as a founder, you really need to care about what you do, not like what you do, care about. You need to
you
believe
need
in
to
what,
obsess about it.
yes, because that brings the right level of competitiveness with it. If it's just an idea or just something that you think this is going to help me make money, you're not going to display that level of commitment and competitiveness and dedication and resilience that they look for. And believe me, if you anybody in the venture capital industry, if you look at thousands of pitch decks and you meet thousands of ventures of founders, you know what to look for. And I've seen some founders pitch what I thought was pretty half-assed ideas very successfully because he was known, hugely competitive, deeply involved in the industry that he's doing this. He has delivered great success on his previous startups. And it's not the idea, as you said, it's more than just the idea. And that's why a lot of people find venture capital interesting. Some people find it sexy. It's because of all these human dynamics and emotions that goes with it and the ability to make huge money for those very few
Huge,
lucky ones.
huge.
Yeah, private equity just I can introduce you to some private equity folks, man, and they all dress up in some pretty swanky suits. They
Oh,
arrive with
nice.
some very expensive cars.
Do they
They
dress
sit
up
in
as like
beautiful.
Monopoly guys? Got the monocle and top hat, and
Oh man, and they crunch numbers like you wouldn't believe, and different animal, different thing. Um, uh, I mean, and kind of one of the last things that I want to leave you with on private equity is if somebody knocks on your door or you are looking for a private equity exit or sale or whatever, my advice, make sure that you get out of it as soon as you can, make the money and leave. If that means you make 20, 30% less, get out, make 20, 30% less, but make a lot of money, but don't hold on. Don't think that you want to do this. Sell, help them find a CEO and get out of the way. Unless you're prepared for a huge amount of stress, aggravation, and in many times just unhappiness.
yep, agreed.
So that's just a bit of advice, that you're not going to hear from any PE fund, that's for sure.
No.
So yeah. Any other question, Matthew?
No, it's pretty much it for private equity and venture capital. I feel like I've learned a bit today about private equity and what it's all about, Werner. Thank you.
Yep.
And if you
It was an
like
absolute
the
pleasure.
yeah, and for our wonderful video watchers, make sure to click the subscribe down below and give us a thumbs up if you like our content.
Please. And if anybody wants to talk to us, always welcome. I mean, and I know you're the same way. If we can help anybody answer some questions, we would do that gladly.
Absolutely. All right. Well, thank you so much. Talk to you later.
Okay, Matthew, take care, man.